What's going on, traders? Welcome to the first ever midweek market update. Now, we're going to need a better name than that, though. So what I want you to do is drop in the comment section down below your best two recommendations. All right, let's get into it. This is going to be a much less formal version of the weekly watch list. Of course, just focused in on the broad market here, so SPY the Qs and IWM. It's going to be off the cuff. We're just going to talk about what's going on. So in SPY right now, we're talking about the price action that started here on Monday and currently right here as of Wednesday. It's 6:45 just about Eastern time. I tried to hold off as long as I could to see if we would get any sort of definitive election results, but nothing yet. So I don't think that the market likes that very much, and the reason I say that is because we've been fading off in the afternoon every single time that we've had an extreme run to the upside, as noted by these upper wicks. So I think Wednesday's run was a lot weaker than Tuesday's run. I'll talk about why when we get to the internals in just a moment. But for now, let's talk about this day by day. Monday, indecision day, right? We didn't know if we wanted to go higher or lower. Tuesday, we get a gap up, and then we hold that gap up. This is where it starts to get important, because we hold the gap and we get what's known as a gap and go, and we essentially fill this gap in the chart. I know I'm saying gap so many times, but we fill this gap in the chart immediately. It was off to the races as soon as we took out that overnight high, and boom, next thing you know, we fill this gap to the tick on really strong internals, and again, we'll cover that in just a moment. Again, another bullish day here on Wednesday, for the reason being, right, 50 SMA right here, downtrend resistance line right here, we gap up above it, we pull back slightly in the morning. We hold most of the gap, right? The majority of this gap did hold, more than 50% of it. And then it was off to the races. But this day is where it gets a little bit more interesting. We didn't have as strong internals. So let's go ahead and look at those now and what I sort of mean by this. So this is the quad of internals. If you don't know what they are, let's do a quick overview. The VOLD simply represents the amount of volume flowing into up stocks versus down stocks. If it's positive, more volume is flowing into the up stocks. If it's negative, more into the down stocks. So on Monday's action, you'll notice it was pretty much straight up. Tuesday, same thing. Again, this is why it's really strong that we had that rally on Tuesday with really impressive volume to back it up. Now, it gets interesting on Wednesday, and again, I wasn't as confident in this rally there because you'll notice we opened at the zero line, dribbled a little bit lower, came up, and then faded the rest of the day and even closed negative. But what's most important here is look at ultimately the high of Wednesday. It was like less than a quarter of what we saw on Monday and Tuesday. So that's pretty telling that that rally didn't really happen on strong volume, because volume is, of course, one of the key things we look for in terms of realistic strength. Let's move over to the right one with the ADD. That's the advancers versus decliners. Basically, if a stock is green and it's advancing, that is considered an advancer. If it's red and it's advancing, that is not an advancer. So the same thing goes in reverse for the downside. If we're below zero, more stocks are declining. If we're above zero, more stocks are advancing. Monday, again, same thing here. Pretty bullish day as we sort of balanced there. On Tuesday, though, what's most important is when we get into this 1,500 to 2,000 range, this is where we start to develop trending days. And on Tuesday, we actually broke out higher than 2,000, which is an extremely bullish event. So it held that for almost until noon, right, if we draw this down. And then even still, we just hovered around that 2,000 mark all of Tuesday into the afternoon. So extremely bullish there. And of course, on Wednesday, it gets a little more interesting because we actually opened negative, drove lower, came higher. But again, look at relatively where this high is as compared to this trending zone up here. Not even close, right? Came into 1,000, faded off the rest of the day. Ticks are more of an intraday indicator. It simply represents the amount of stocks that are upticking versus downticking. And instead of like the ADD, it doesn't matter if they're green or red on the day. So again, more of an intraday indicator, but what we want to focus on is this cumulative build down here. On Monday, you'll notice it was positive. Tuesday, again, extreme bullishness. If we draw this over, it was over 2,500 by 11 o'clock, which is, again, a pretty rare event to see. Extremely bullish, even the fact that we closed higher after that. On Wednesday, again, just beating a dead horse at this point, but it was bullish in the morning, but as the market faded, as we saw this volume sort of drop, it didn't really pick up like the rest of these days. Again, the internals here in the tick faded off as well. And I'm not going to say that it's bearish, right, because we are above the zero line, but it's certainly not as bullish as what we saw on Tuesday or even Monday. Let's just look at the futures now briefly. This is a 24-hour chart. I will maximize them. I have this trend line drawn in, and basically all I'm trying to say with it is the fact that, we came into this week with a bearish sentiment. That's what the candles were telling us prior to the election starting. But now, if we just draw on this arrow going from lower left to upper right, it's pretty hard to argue that that's bearish, right? This is about as bullish as it gets. Right now, though, what I want you to note and why I think today's price action, is getting a little ahead of itself, especially with the uncertainty of not having a winner yet, is look at how far away we are from this trend line, right? That's a pretty significant distance there to be breaking away from trend. Of course, things can go parabolic. They can go straight up. It doesn't have to pull back to the trend line. But in order for a market to be healthy, it's really got to have some give and take, right? You get a huge push, then you see a pullback, then you see a push, then you see a pullback, so on and so forth. You get the give and take. And right now, it's pretty much just going straight up. Look at again, one more time, the distance here, especially between the 200 SMA as well on a 15-minute, 24-hour chart, that's pretty significant. So that being said, I'm not saying that this is the top or that it has to turn over. I want to make that clear. I'm not trying to call a bearish top here, but maybe just exercise some caution, especially with the fact that we don't have a clear election winner yet, and we are getting a little bit ahead of ourselves. Again, I'm not saying short this thing, but I'm also not saying all in, go long here. We're going to, 3,500 plus. Let's go ahead and flip it to a 4-hour and just look at some local resistances that we can sort of look at for tomorrow and into the rest of the week. We'll remove the trend line for now. Actually, you know what? Let's keep it. If we get a pullback into it, I'd say that's probably buyable on a first touch. But if we go higher than where we're at, like if we clear this local high up here at 3480, then let's see what we're looking at. We're probably going up to our next set of highs. I'd call it somewhere in here, more around 3,500 psychological. We also start to get a couple of highs that provide confluence in the past. If we do something like this, we have prior lows, and then resistance as well. So that's what I'd be looking at for a longer term upside target. For downside targets, again, pull back into the support trend line, maybe the 3,400 mark as well. Let's actually go back to, let's say, a 30-minute chart now, and let's look at some more recent areas of support we could target. I would say this area is going to be key on the chart here. It's the low of Wednesday at 33.95.50. I'd be watching out for that just because that's sort of where our night of the election started, right? That was our first local high. We pulled back, boom, boom, boom. And then that's where we pulled back and held on Wednesday. That's why I'm calling that the most important sort of level going forward. If we pull back into the support trend line, if we go to the 3,400, I think there's a decent amount of support in this general area of the chart that it might be buyable for the rest of the week. Here we are on a market profile chart. I wanted to share this with you guys because it does tell another story that you don't necessarily get out of the candlesticks. Right now, what I want you to focus on, if you've never seen one of these before, all you want to focus on is this yellow shaded area right here, the one that's a little bit more highlighted than the rest. You can see the break is right there, and the break is right there for the top. And that's just going to represent our value area, or where 70% of today's trading volume essentially occurred. So when you see that value area move higher, it's definitely a sign of strength. And the other thing I want to point out is, of course, this greenish yellow line right there, that represents the area where the most volume was traded, or the fairest price to do business. And that migrated higher with price today. As I was talking about earlier, I was a little skeptical of the rally that we saw today on Wednesday, but ultimately the POC, or point of control, did end up migrating higher with price, which is a bullish carry forward. We do have a poor high up at the top here, meaning if you look at this low down here, you can see that we have single letters down here. When we have two that have stacked completely even, that's what we call a poor high, and generally those need repair by some sort of meaningful excess on top. The profile should look something like that, as opposed to just having two letters side by side. So that being said, the probability for higher is there. Again, we talked about the trend being up in our candlestick charts, and value here, again, is breakaway to the upside. So again, focus on this shaded yellow area, and again, I'm going to have to move the entire chart to get to our next one. It is breakaway to the upside. So value is moving higher with price. It's not like most of our volume was actually traded down here, even though we printed a huge green candle that closed way up here, right? If you can imagine, the candlestick looks something like this at one point. And then as we faded towards the end of the day, again, remember our Wednesday candle looked something more like this. So that being said, I did just want to make mention of it. We have a point of control that's migrated higher with price. We do have value that's breakaway to the upside. In terms of the profile, again, a poor high up here, poor high up here. It was taken out. So let's see if we can get that again. But I really would like some consolidation before doing so. Again, I think it's all going to come down to the election. And if we can have a definitive answer of who will be in office for the next 4 years, let's get into the rest of our charts. Moving over to the Qs now, we'll start to wrap this up. The Qs are just as bullish with a large gap below us, again, now above the 50 SMA, above our resistance trend lines. So we are in a new uptrend, right? We do have a set of highs, or lows rather here, set of higher lows. Now we're looking for that next higher high. So ultimately, if we do continue the daily uptrend, right, we're looking at something over 297.40, excuse me. But we do have to clear this level that we're at right now, which is at 287.28. If we can get acceptance above that, maybe the market likes the outcome of the election. If we can get that before the end of the week, maybe we run into this 297.40. That way we have, we have a certain outcome, right? To the downside though, just look for the gap fill. If it starts to fail underneath that 50 SMA and back under the resistance trend line, of course that's bearish once again, and we will target this set of lows this time, since this double bottom is relatively weak. And last but not least, Russell 2000, IWM, and our small caps. What's interesting about this chart is the fact that we actually got the large gap up on Tuesday, right? Not on Wednesday. On Wednesday, we actually had a gap down, which was opposite the entire market, and then we filled that gap and rallied just like the rest of the market to the upside, ultimately closing, though, back inside of our consolidation range. So I'm looking for chop in here. I wouldn't really look to get too active in the small caps unless we break out over our 164.18 or start to break down and fill this gap back down to 155.90, 156, even the 50 SMA depending on the time of week. So that's the simple over or under here in IWM. Looks like it's trying to, it did set a new set of higher lows right from here. Higher lows here. We do need that higher high to continue the daily uptrend. I wouldn't call the bull flag intact, really, right? We were talking about this flag. Although we are back in the range, it was essentially violated with this price action that developed down here. It's not the end of the world. Of course, there still could be a breakout above that key resistance, but it's not going to carry the same strength as if it was just a regular bull flag. So that's going to wrap it up, really. If you have any questions or want to see anything different covered in next week's midweek market update, maybe you want the videos shorter, maybe you want them longer, maybe you want me to not cover as much internals, maybe you want me to skip the market profile, let me know in the comments section and we can certainly sort it out. Again, I do want your recommendations on a name for this sort of series. And with that, I wish you a green trading week, and don't forget to watch the weekly watch list coming out this Saturday or Sunday.